Hey guys, welcome back to the channel. It's Pete. This is where we talk about money, finances, where we give you information and education to help you make the best financial and investment decisions possible. Welcome. If you are new to this channel, great to have you here. If you're here because you found yourself looking for information about how investment works and you're tired of jargon and watching videos that confuse you even more than when you started watching the video, then this is definitely the channel for you. My hope in every video, and I endeavor in every video to use simple language so that you can follow, you can understand what I'm saying. And if I do use jargon, I try to make sure that I break down that jargon so that you understand what that jargon means. But for the most part, it's all about empowering you on your investment journey. So if you are new here, you've just stumbled on this account, consider subscribing, hit that notification bell down below, and make sure you smash that like button as well to help me out with the YouTube algorithm so people just like you can find this channel and gain some knowledge from the information and experience that I share here. I upload every Tuesday and Friday at 5 p.m. I want to start this video off by saying thank you to everyone who joined me on the live on Sunday. There were so many of you, and there was such a good conversation going on in the chat area. It was fantastic, and I think this is probably maybe the 7th or 8th live that we've done, and to see the numbers grow every single live is fantastic. The next one's on the 17th, 15th, I believe, of November. So if you want to check out the live sessions that I have, which is basically me just answering questions, then definitely consider joining us on the 15th of November. I also want to say thank you to the members who have joined the club, the membership, over the last month. We've got a private Discord group. We're going through my investment course as a group. I'm tutoring, answering questions, so on and so forth in the Discord group. There were questions coming in. I'm answering them on the fly, on the go, trying to empower people's investment journey. So if that sounds like something that you want to get involved in, make sure that you check out the join button right next to the subscribe button below. With that being said, today is all about reviewing a new app on the block, a new kid on the block, or should I say maybe, just maybe a new king on the block. The app is called Stake. It's pretty good. I'm going to be talking you through all the pros, all the cons, the things that they do really well, the things that you need to know, and how they can help you build a wealth of a portfolio, and pun intended, by the way, guys, to really get you going. So with that being said, let's go. So Stake was launched back in 2017. It was actually developed by a guy who is an ex-high frequency trader who worked in New York. He's actually Australian, went back to Australia and found out that accessing the US markets was a bit of a nightmare. So like a true entrepreneur, what he thought was, well, there's a little bit of a problem. I have a solution, and he's done it. Now, I think it's really, really important because I had a conversation with their marketing guy just last week, and the conversation and how he explained how they want to be seen as a brand is extremely important. It resonated with me, and I want to share that with you because I hope it resonates with you. And it resonated with me because if you've heard me speak here on the videos or on my podcast, you'll know what my views are on, this idea of investing and how exclusive it can be, or it seems to be, in terms of the perception of only wealthy people invest, where actually everyone should invest. And the conversation I had with Andrew last week really did warm my heart because they have a very similar outlook to the way I see investing and how it should be talked about and promoted and encouraged in the wider society, not just for wealthy people. And the way Andrew explained how the brand wants to be seen is they want to be seen as a brand that bridges the gap and makes investment more of a cultural thing. So they bridge the gap between investing, the idea of investing, and culture. And one of the ways that they've done that is he uses an example of the work that they've done with people who trade sneakers. So if you're a sneakerhead, then you know that if you've got a first edition pair of Air Maxes, they can be worth quite a lot of money. But how much of these sneakers are worth at any given time is all down to market sentiment, i.e. how much someone is willing to pay for those first edition Air Max or Air Jordans, right? And a lot of that has a lot of correlation with how the stock market basically works. The demand versus the supply. What makes a pair of trainers worth £5,000 and not £2,000? And what Stake essentially want to do is they want to make investment more like that so that you can relate to it more by infusing cultural subjects that we all see on a day-to-day basis that are popular in culture to bridge that gap to open up this conversation about investing and creating wealth. And that's something that I'm really, really passionate about. Now, this is not a paid ad in any way, shape, or form. I'm going to tell you their USPs. I'm also going to tell you about a couple of things that I think you really, really need to know. One of which is really, really important if you're investing, and certainly something that, with everything that I talk about, is something that they don't do just yet. So I'm going to give you my fair view. If you watch any of my other review videos, you'll know that I always say that if you're using someone for trading services, investment services, or any kind of financial advice, then they have to be authorized and regulated by the FCA. And you also need to make sure that you get some protection under the Financial Services Compensation Scheme. Now, good news on both fronts. They are registered and authorized by the FCA. You do get protection under the Financial Services Compensation Scheme as well. But there is a little bit of a kicker, which I believe is absolutely phenomenal, particularly if you are a serious investor. Now, typically, you want to have Financial Services Compensation Scheme coverage because it's £85,000. So if the company were to go bust due to bankruptcy or just disappear off the face of the earth, you can get your money back up to £85,000. Now, if you're a serious investor, you may be thinking, well, £85,000 isn't a lot. So you start having the conversation about how do you spread your money across a number of providers. I didn't know there was even a thing until I had a chat with Andrew. I actually had to Google this after I had a chat with him. But Stake actually give you an additional level of protection up to $500,000. And that's via the SIPC, which is the Securities Investors Protection Corporation, which is an American thing. So Stake are essentially a US market specialist. So what that basically means is they don't give you access to any other markets aside from the US market. Now, why the US market? The US market is the biggest market on the planet. It's where all the big boys are. Tesla, Amazon, Google, Facebook, Microsoft, Walt Disney, Coca-Cola, you name it, they are all in the States. So they are positioning themselves as US market specialists. So they are essentially the home of the US markets for UK investors. And because they trade mainly on the US market, you get the SIPC protection as an additional kicker to your £85,000 Financial Services Compensation Scheme protections, which means that overall, if you look at it in pounds, you get cover for just under £500,000, which, if you're a serious investor, is a big, big win. Other things you need to know: you can trade up to 3,800 US stocks and ETFs with Stake. It is commission free. We will talk a little bit about how they actually make money, because that's always a big question that people ask about free trade and trading 212, trading 212 specifically. So we'll talk a little bit about that. So it's still commission free, and you can still buy fractional shares. So you don't have to worry about that barrier to entry if you are just starting out buying stocks. And by the way, guys, if you enjoy some of the stuff that you're hearing through this video and you want to use them, there will be a link down in the description below that will get you a free share. There is a caveat: you have to fund your account within 24 hours of downloading the app. The share that you can get could be up to £100. The minimum you have to fund your account with is with £50. If you want a free share and check these guys out, use my link below in the description. Now let's talk about some things that they don't do as well before we get onto their main USPs. Right, so there are two things that really stand out to me that you need to be aware of if you're going to use these guys, okay? The first one is that at this point in time, and I'm recording this in November 2020, they do not have an ISA offering as yet. Now, if you've followed me and you've watched my videos, you've listened to my podcast, one of the things that I repeatedly say is that the first rule of financial planning is you need to think tax efficiently. I.e., if you're investing, your first £20,000 should really go into a cash ISA, because a cash ISA allows you to invest money completely tax-free, regardless of how much your investment grows by. At this point in time, Stake do not have an ISA wrapper available for you to use. So if you're using Trading 212, for example, you can buy individual stocks in Tesla, in Amazon, in Google, in a whole host of companies and put them into an ISA account or ISA wrapper. You can't do that here with Stake at this point in time. When I spoke with Andrew, this is something that they have in the works. They're hoping to introduce this a bit later on. So if you are watching this in 21, hello future, they may have an ISA wrapper for you to invest in now. So I strongly encourage you to check it out. The second thing that is really important for you to know is that you cannot trade their ETFs unless you have an account balance of £30,000. This is a big one. And that's purely because if you're using people like Trading 212, for example, and you're accessing their ETFs, they are traded on the London Stock Exchange. Because Stake are essentially a US specialist, all of their stuff is traded on the US market. So because of that, there is some regulatory rules here called MiFID. I'm not going to go into it because I'll bore you to death and we don't have enough time for this video. It means that you have to be a certified investor, which means you need to have essentially a balance of £30,000. If you're starting out, this may put you off. But again, if you're a serious investor with quite a bit of money that you're throwing into your investments to build your wealth over a rapid or a quick period of time, then this shouldn't be too much of a deterrence for you. And again, this does kind of go hand in hand with the fact that you get additional protection under SIPC. That's why you have that protection in place, really. So two things that you need to be aware of. Let's talk about some of the things that they do well. And for me, I want to highlight one big thing, and I'm going to show that to you in the app as well. So if you're an investor, be it a first-time investor or an experienced investor, one of the things that you're probably really concerned about is, well, how do you go about making sure that you make the best stock picking decisions possible? Is one of the questions that I often get all the time. Now, I've worked in investment houses where I've sat with investment managers, and on a daily basis, they will get a buy, sell, or hold recommendation list down from the research team, a team of analysts essentially. And these analysts look at the markets, they look at what's going on, and they assess companies that are on their watch list or within their universe. And they basically determine whether a company is a buy, a sell, or a hold. So they'll be determining whether a company is overvalued, undervalued, or whether they're just about right. And typically speaking, it's very hard for retail investors to get access to this kind of information. I mean, you could pay for it via some resources, but because you're a retail investor, oftentimes you don't get the full picture. And this is where, for me, Stake have absolutely killed it, because they put this front and center within the app so that you can be assured that from a research point of view, you have got some intelligence in terms of what the big boys in the investment world are actually doing and thinking about any particular stock. Now, this is the app. I'm going to show you this really quickly. I funded the account now with just over £100. So on the conversion rate is $124.84 roughly. And we'll talk about how they make money and some of the fees that they impose as well on here, because they have to make money, right? There is no such thing as a free service. So I've credited with £100. It's $124.84. And I'm just going to go on to Wall Street. So Wall Street is basically their center for all of their stocks. And again, you can buy up to 3,800 stocks and ETFs inside this app here. So it gives you an idea of what's going on at the moment with the S&P 500. It gives you market movers. It gives you popular searches. So what sector do you fancy? Do you fancy groceries, electric, bottling? What do you actually fancy? What are the top searches? Probably not sectors. Sectors is the wrong word for this. But what are the top searches that people are looking for? Then you can also have a look and see who are the movers and shakers. Who are the most upward trending stocks on the market? Who are the ones that are losing the most on the market? So you can have a look at all of this, and you have daily news as well. So there's a lot of stuff in here: tech sales and marketing salaries in Texas revealed. There's a lot of stuff in here in terms of intelligence. You've also got strategies, 52-week highs, short the market, upcoming earnings. Now that could be a really good one, because if you're looking at a particular stock and you're trying to ascertain how the company is performing, then quarterly earnings are really important, right? Because Typically, that's an indication of how the company has performed, and it gives investors confidence about what may be around the corner. So, looking at things like upcoming earnings, what companies are due to report their quarterly earnings is good because it may give you the opportunity to go in with a few trades to enjoy some short-term growth. You've got high paying dividends in here, what's new on stack, and trade volatility as well. You've got the wrap, which is a load of like newsletters and articles. They have a podcast as well. So they're talking industry stuff. So there's a wealth of knowledge within here. But what I do want to highlight to you guys is the function that I was explaining before. So let's just go in here and let's have a look at a company that is well known. So let's have a look at, for example, Tesla. And as you guys know, I do hold Tesla. I love Tesla. I have a car. There's a Tesla, and the car is the reason why I bought the shares, frankly. And I really do believe in what they're doing. And I love Elon. If Elon were to leave, I'll probably sell my Tesla stock, to be completely honest. So let's have a look at Tesla. So in here, you're having a look at the stock price. Thank God today it's at $400. Yesterday it was at $388, or on Friday it was at $388. So it's up already at the moment. And it's telling you right now that there are 1,060 people viewing this stock right now. There are just over 12,000 trades. I'm sorry, views are 1,060. There are over 12,000 trades, and people that are actively watching this stock is at 683. Now it tells you how it opened, what the high was, what the low was. There are no dividend yields at the minute because they're not actually paying dividends. It gives you a little bit of news that is Tesla related. But what I want to pay attention to here, or draw your attention to here, is the analyst ratings. Remember I was talking about the buy, sell, and hold recommendations that professional investment managers get? This is your version within the app. And if you're looking for rich data, an indication of what the big boys are doing, this right here is it. Because what this is telling you is that Citi, for example, considers Tesla to be a sell right now. But scoring out of 100 for propensity, they're only a 7%. It's telling you that Morgan Stanley believes that Tesla right now is a hold. So you may take this into consideration as to, do they see this as being something that is overvalued right now or just about right? But they consider it a hold. And you can also see that Canaccord here also sees it as a hold. Interestingly, these three do not see it as a buy. So if you're looking to pick stock, this will form a key part of your consideration as to whether you buy a stock or not. Again, these are professionals. They have come to this assertion of it's a sell or a hold based on internal research, based on data that their teams of professionals, floors and floors of professionals, have had a look through and think about the share price. So as a retail investor, if you're really, really serious about investing, this is absolute gold. And it's just an extra level of due diligence, an extra level of data, of analysis, of analytics that you can use to inform your decisions on whether you buy a stock or not. I'm just going to click on this very, very quickly because this gives you a little bit more of an indication of what's going on. So it tells you that the current price for Tesla is $400. And if you click on these arrows right here, these guys are saying that it's actually still a hold, but they've got a limit on there about 419. So that may suggest that they might sell at 419. Potentially, we don't know, but it gives you an idea of what the price ranges are. At this point in time, if you have a look at it based on where it was and where it is right now, you've still got about $19 worth of growth before you could argue Canaccord would move here. And that's Canaccord's view. That's Morgan Stanley view right there. They think it's a hold at 360. So right now you could argue that potentially they may revise their outlook and say it might be a sell or worth a sell at some point in the future, depending on a number of other variables. But again, if you're using this app, this gives you an idea of what the big boys, the big investment houses are thinking. You can also have a look at what Citi are thinking here. I mean, they're thinking it's a sell. I mean, I completely disagree with that. I think Tesla's a great company, but they must be seeing things that I don't have access to. But again, when you're looking at this kind of information, you don't just take this for verbatim and take this as gospel. You also have to examine what your own beliefs are. And, you know, I'd be digging out why these guys think it's a sell. Now, if all three of them were saying sell, I would definitely be compelled to think about, well, why are all these big houses thinking it's a sell? I'd be doing some further research. But this gives you a very good overarching view of how the big boys are thinking. And if you're serious about building wealth and serious about investing, this right here is absolute gold. So this is one of the features that I absolutely love that they're actually doing. I am going to be buying some stocks with these guys. I was thinking about transferring my trading 212 holdings over. I'm not too sure yet. I'll probably keep you up to date with that. But again, if you want a free share just for checking these guys out, there's going to be a link in the description below. So make sure you use that. Grab yourself a free share. Like I said, you have to fund the account within 24 hours of signing up. The minimum amount you fund it by is £50. So just let you know on that. Right, so it is commission free, obviously, but as with all things, they are a business, they have to make money somehow. So how do they make money? These guys, I was happy to have this conversation with Andrew when I spoke with him last week. He was like, look, we're happy to tell people how we actually make money, and actually we do need to make money. And the first way that they make money is that they actually have an exchange rate fee that they charge. So because they're operating on the US stock market, you're going to buy in pounds, it's going to be converted into US dollars. They will charge a 0.5 fee on that transaction to convert from pounds to US dollars. They do have a minimum fee of $2. If you're exchanging, something like £100 like I have now, they charge me £2 essentially. They also charge by adding a levy if you want your transfer to happen a bit quicker. So if you don't mind it taking 2 days, you can have it done for free. But if you want it done really, really quickly because you want to move on a stock really, really quickly, then it's also going to cost you an extra £2 as well. So that's one way they make money. The second way they make money is by essentially getting interest on cash that they hold in a bank. And that's pretty commonplace for investment houses across the world. So if they have any cash in the bank, they'll obviously be getting some interest on that. So they also generate some income from there. The third way that they are going to be earning money, because they're not doing that currently, and this leads me on to a really important point that is, again, another reason why you need to check them out right now and not wait, is that there are 2 tiers of accounts that they have available. So they have a basic free account, which essentially gives you access to obviously the full stock suite and the ETF suite. However, it doesn't give you access to the analyst ratings. So the analyst ratings will form part of the black account that they're going to be launching in January. They're going to be charging £9 a month or thereabouts, £9 a month for that privilege. However, if you use my link below to open an account and get yourself a free share by crediting the account with $50, then, or £50, sorry, then you will automatically get access to the black and all of the analyst ratings for completely free. That offer is only open until the end of the year. The minute January kicks in, they're going to be charging £9 a month for the black account, which gives you all of the analyst ratings that I showed you there, which is essentially the buy, sell, or hold recommendations. So again, if you want to check these guys out and you're a serious investor, you want to do this now, there's a link in the description there. Okay, so that's pretty much everything that I wanted to cover in terms of what Stake basically do. Look, are they going to compete with Trading 212? I definitely think so. If you're a serious investor, then the analytics, the data that they're going to give you is a big bow to their string. Like I said, there is a bit of a downfall in the fact that they don't have an ISA wrapper, but that is coming a bit later on. And you can't trade the ETS because it's traded on the US stock market, and you have to be a certified investor with an account balance of £30,000. They're not trying to capture absolutely everybody, but for those of you who are serious about building a portfolio, then this is an app that is definitely going to give you that extra string in your bow, that additional edge for you to understand what stock picking decisions you're actually making. There's another conversation that Andy and I actually had. We'll probably leave that for the podcast. He is going to be coming onto the podcast in a couple of weeks' time, so watch out for that. But guys, I thank you so much for paying attention to this video and watching up until now. Again, if you want to check these guys out, there is a link in my bio and claim your free share. I think the free share is up to £100. But guys, if you're not listening to the podcast, go check it out right there. We're in lockdown 2.0. I share some really strong views here. Let me know whether you agree with me or not, but I appreciate your time, appreciate your participation, appreciate the comments, the likes and everything, all the support that you show for the channel. Until Friday, have a good week.